Hello, hello, hello. Test, test, test. Long time no stream. I think the last stream was oh, keep forgetting to do that. Okay, let's go ahead and mute that, mute that. Okay. I think the last stream was like middle of November or something. But yeah, it's been a while. Mostly I mean, I've just mostly not been doing it because people haven't been asking me to do it. And the prior streams haven't been getting very many numbers. So I just haven't been doing it. But also like the markets haven't been terribly interesting. I mean, we did have this gigantic drop, but I think I streamed after that happened. I forget. I don't know. But yeah, let's go ahead and get into these charts here. And I'm going to be talking about not only just Bitcoin. This is all going to be macro stuff, not necessarily like low time frame stuff. We're going to be looking at like daily charts, support resistance levels, and I really want to talk about the relationship to the S&P 500 because it's very very interesting. It's something that I've been like following pretty closely. If you follow my Twitter account, then you've been seeing that pop up. And also, excuse me if I seem a little low energy. I am fighting off the world's largest hangover after blacking out last night for the first time in like I don't know, 6 years, 7 years, long time. So yeah, so that's where I'm at right now. Okay, so let's go ahead and get right into it then. Okay, so first and foremost, let's go ahead and throw on some handy dandy indicators, so we can develop a trend model. And since this trend's been going on for a while, we can actually start to look at like weekly stuff because that's where the real interesting stuff happens. I'm gonna turn off the cloud and we'll just look at the EMAs here. Okay. And let's see if my Wacom tablet is plugged in. I did some like reconfiguring with some of my hardware back in my computer, so I might have accidentally unplugged it. Let's check it out. Is it there? Ooh, hooray. Okay, cool. All right, so never mind all this little stuff in there. I'll talk about these little rectangles and stuff. Mostly what I want to focus on is this beautiful, perfect touch of the weekly 200 EMA, which is this red curve here. Okay. Also keep in mind this is Coinbase, so the price history isn't very long. That's why we see just the beginning of the 200 EMA. But if we look at something like, maybe if we look at like Bitstamp or something, then we'll see a much longer nice price history. But it's also interesting that the 200 EMA is not providing. What the hell is up with that? I just noticed that the Coinbase 200 EMA is providing support, but the Bitstamp one isn't. It's significantly different. What does Bitfinex look like? I don't know why I never noticed that before. Huh. I guess Coinbase is the anomaly here. Oh, Sorry, I'm just going through all these exchanges here. Yeah, it's very interesting. Okay. Well, maybe we shouldn't talk about that then. Actually, fuck it. It gets a lot of volume, so let's go ahead and talk about this. So the 200 EMA for Coinbase, which is like, one of the major retail, one of the entry points for fresh, retail dollars to hit the market. We're finding really nice support on Coinbase's 200 EMA. Not so much on the other ones, as you saw, but so why is this important? Because we didn't break through, which would be a sign of further macro pain in our future. But also because it also coincided with a level of support here. Okay, and I'm going to explain what these little boxes are here for those of you who aren't familiar with the concept of order blocking. So the idea is that big money needs it goes hand in hand with Wyckoff theory. So it's something that I'm still fairly new with it. I don't necessarily do a whole lot of trading with it, but it's really nice from a macro perspective, and I'll zoom in here in a second, and I'll show you what all this red shit is. But just keep in mind that these blue rectangles here are what are called order blocks. And all an order block is, it is a representation of trapped capital in a given position. So, and in these two cases, they represent potential liquidity pools for larger investors like institutional money, investment banks, stuff like that. So it's of particular interest because it shows basically where we are on a macro level. And all an order block is it is the last. So if we're looking at like a bullish trend here, it is the last red candle before it makes a new high. So here's a new high here and here, and we see that there is a red candle here and a red candle here, and there's a lot of nuance that goes into, not a lot of nuance, but there's a good bit of nuance that goes into actually executing trades and entering positions. But the general idea is that it is a zone of support or resistance, and a break above or below represents a continuation or a reversal of a trend. That's all you need to know. Okay. So as I zoom in, keep in mind that the blue order blocks, blue equals weekly. Okay. So let's go ahead and zoom in a little bit and look at the daily candles here. So we can see that the 50 EMA has yet to be breached. It's only been breached a couple of times throughout this whole past year, and the market was totally unable to hold above those levels. We can see here it poked above, and it dropped below, poked above, dropped below. Barely poked, barely wicked, and then the last final poke above led to this gigantic drop. Okay, so when we're looking at this from a macro scale, one of the nice signs one sign of a reversal would be if we can hold levels above the 50 EMA, and for example, we broke out above and found support. Well, that would be really, really good. Okay, because we haven't been able to do that at all. We've found very little bullish pressure above the 50 EMA, and it previously has provided an opportunity for short sellers, right? Like, the price did not hang out above there long, and when it did, it was swiftly rejected. Okay, and same goes for the 200 EMA on the daily. You can see here that it barely hung out above it, and they provided really, really nice short opportunities. But for right now, the 200 EMA is very far away because of this gigantic drop we had. Okay, so when we're thinking about this idea of like order blocks, the same thing. This concept can be applied on all time scales. Obviously, the higher time scales are going to be more significant for the macro trends because it's a macro support and resistance. But if we look at something like the daily here, we've got a really nice batch of order blocks here. So you can draw order blocks a couple of different ways. You can draw them just from the high and low of the close and the open, or if you want to be a little bit more conservative, you can draw it from like the wick to wick. So if you look here on my chart, I've got two things marked out. I've got the body, and then I've got the wick. Okay, and what I'm looking for specifically is a close on the daily above not only this zone, but this little guy here, because you can see here, following this was the last, we see the downtrend here, but this is the last bullish candle before we just kind of started breaking down. I started forming this little inverted head and shoulders thing. But for me, a macro trend reversal, on a macro time scale is going to be if we can close above this level right here. This is what I'm looking at. This is a close above here is starting to look good, but a failure to close above here most likely means we're probably going to come back down. And my personal theory is that we're actually going to, I think we've either bottomed or we're very close to bottoming, on like finding like, you know, the quote, you know, the bottom. And my personal theory is that we're going to come back up here, test this, and come back down, and we're going to start to form a large accumulation trading range. And I'm going to show you what that could potentially look like, because that's what we did the last time we bottomed after a bear market. So let's go ahead and look at Bitstamp, because I already have it marked up. So if we look at the daily chart on, yeah, as you can see here, I already have like this, the beginnings of a trading range marked out here. So if you look over here to the previous, oh, I thought I had this labeled. Is it on Bitfinex maybe? Ah, there we go, on Bitfinex. So if we look at the previous bottom for Bitcoin, right, it's very similar to the current market. And you can see here, I'm actually missing some labeling here, so I'll add that right now. This would be what is called the preliminary support. And the break below this is where the trading range begins. So you can see here that this, if you're not familiar with Wyckoff theory, it's just the idea that in order for markets to be sponsored, sponsorship looks something like this, right? When the market starts to mark up very strongly, well, that requires money to do so. And in order for money to do so, they have to get control over the market. And this is what an accumulation trading range could look like. This is a very like perfect, ideal trading range that took place back in 2015, right? I'm of the opinion that we're going to do something similar to this. Maybe not look exactly like this, because the markets are a little bit more liquid than they were the last accumulation period. But I definitely don't think that we're just going to like, you know, do something like this, like bottom and then just start rallying again. I don't think that's what's going to happen. I think what's actually going to happen is we're going to do a long-term accumulation trading range. That's probably going to take place, you know, for the better part of a year. And then, you know, we'll see what happens from there. But after such a sustained bear market that we just had, you know, this thing, I find it very unlikely that we're just going to rally and then find a bottom and then just everything's going to be yippee skippy. I mean, maybe it does, and that'd be cool if it did, but I'm not sold on the idea. Okay, so where I think, if we're looking at the previous trading range, where I think we are, you know, is somewhere either here or here, where we're finding, we initially tested the selling pressure, which is the quote unquote selling climax, which is this SC here. And usually what happens after the selling climax is we have something called an automatic reaction, this AR, or automatic rally, sometimes it's called. And what that is a next test of demand. So first we tested supply, and we had this giant capitulation, boom, right? And then the next test is going to be a test of demand, which is going to establish the upper boundary of the trading range. And typically that usually rallies above the preliminary supply. I'm sorry, preliminary support, which is this PS level here. So with this in mind, this preliminary support, selling climax, automatic reaction, let's go ahead and look at our current market, and we can start to hypothesize where we might be. Okay. So I think we're somewhere here where, so this would be our preliminary support here, and we're still testing demand. So it would look like this. So we'd have our selling climax. This would be our preliminary support. And right now we're still doing, you know, this would be the automatic reaction, would be this guy. And now what I think is going to happen is we're going to pop a new high and then most likely pull back. I don't put much stock into this, this inverted head and shoulders. I mean, if it plays out, cool, but I'm not very hopeful for it. I mean, maybe it plays out and we establish a much larger trading range. You know, maybe it like comes up here and it gets rejected, but I definitely don't think it's like gonna spark this like bullish rally that I see a lot of people are talking about. I think it comes up and tests somewhere in here, you know, and gets rejected. But you know, I'm open to get my mind changed. Like I said, the zones I'm watching right now is going to be the interaction with this level here. You know, specifically this, but more immediately this. Okay, so this is what I'm watching. Also, if you look at like if you look at the macro level, there was really nice Fibonacci retracements, and you know we're about where one might expect to see a bottom take place. Typically, markets after they have parabolic blow off, they retrace between like 80 to 90%, and right now we're down, you know, something like that. The lowest low was at 80, you know, 84%. That's not to say we can't go lower, because look, you know, it can definitely go lower. But you know, I'm starting to see an argument for a bottom, especially with the way that a lot of the alts are looking, which I'll talk about here in a second. But the alt Bitcoin pairs are showing signs of accumulation, and they're showing signs of leadership, which is what we want to see. And what leadership is like, you know, if you have an index, which I guess you can kind of look at Bitcoin as like the crypto equivalent of the S&P 500 or the Dow Jones or the Nasdaq or whatever. What we're looking for is signs of leadership, where there's an eagerness to buy in other areas. So you know, we look at these random altcoins like Ether or Cycoin, which is something I like to talk about, or Komodo, which is one that I've been talking about. Like, they all have really, really, really great accumulation trading range. Not so much Ether, but when we're looking for signs of leadership, we're looking for something like that. I'll pull up an example here. So so this, you know, we're seeing long-term macro accumulation trading ranges like this pop up a lot. So here's an example, Komodo. Okay, a lot of people don't even know what the fuck Komodo is, but it's like a privacy coin. Beyond that, I don't really know a whole lot. But when Bitcoin was shitting its pants, Komodo was just chilling, right? And we see this with a lot of coins. Here's another example here with Cycoin. Okay, it kept its shit together while the market was going, you know, going to the depths of hell. And what I'm looking for is for more alts to do stuff like what Komodo is doing right now. Okay, and that is going to be a sign that Bitcoin has bottomed when we see breakouts. And I'm not talking about these like random pump and dump things. You know, I'm talking about like legit accumulation trading ranges like this that show macro interest from large money investors that are just waiting for the right time to break out. So Komodo is something that I'm keeping my eye on because it has a very clean accumulation trading range. Cycoin is something I'm keeping my eye on because, again, the same thing. Stratus, same sort of thing, right? So we're seeing signs of these things pop up, and what I'm looking for is this, you know, these signs of leadership. Stratus looks really good right now, right? And it had a very clean accumulation. So here, again, here's the preliminary support. It popped a new low for a selling climax. It tested a new high for the automatic reaction, and it tested a secondary test on the bottom. And so I think these are going to happen on higher time scale. Oh, I'm sorry, lower time scales. And after these things mark up, meaning, you know, they have their runs, once they've concluded, I think all of that capital is going to go back into Bitcoin, and then Bitcoin will rally. So there's a very cyclical nature to where capital flows, and this isn't unique to crypto, but you know, this is where money goes. Investing money is somewhere, and you have to figure out where it is. And right now, the investing money looks like it's in alts. People are accumulating heavily on the alts while Bitcoin figures its shit out. And when Bitcoin has, you know, established its trading range and properly accumulated, then I think we'll see some pullback on the alts, and then Bitcoin will run. And there's a relationship I specifically want to talk about, which is the Bitcoin relationship with the S&P 500. But before I do that, I see a few questions have popped up, so let me go ahead and look at these real quick. That's not capitulation. It's not an inverse head and shoulders. Volume. Okay, very insightful. Okay. All right, so let's go ahead and talk about this relationship with the S&P 500. And this isn't unique to the S&P 500. Like, this looks, you could mark it up the same way with like the Dow Jones. It looks very similar because, you know, they're trending together. But this relationship, I don't know why people continue to insist there's not a relationship, but they're wrong. I mean, it's very clear. I think mostly I think it's because people don't understand Wyckoff theory very well. So it doesn't really make a whole lot of sense to them. But so let's go ahead and look at this thing because it's very interesting to me. So if we look at this, let's go ahead and we'll move left to right, and we'll talk about all this anatomy I have labeled here. So we see here. Actually, let me go back to my Bitcoin chart, and I'll show you what this pre-hypodermic means. So if we go to so if we go back to Bitcoin here, and this is on Bitfinex, but it doesn't matter. We see that there is a very clear parabolic market here, right? Undeniable fucking parabolic. And this is on log scale. So taking that out of log scale, it's like super parabolic, right? So if we look at it on log scale, we see it's obviously parabolic. But what's specifically interesting is that it actually went parabolic inside the parabolic, which means that, you know, it broke north of a parabolic curve, which is where you get the, you know, the term parabolic blow off, and it's just like, you know, the so-called irrational exuberance. But in Wyckoff theory, that's just called a hypodermic trend line. Okay. So this price level right here is where the hypodermic begins. So when I go back to this chart and I say hypodermic or pre-hypodermic high established, or pre-hypodermic established same day as S&P 500, I'm talking about this, okay? Which means that it came down, it touched the parabolic curve, and it decided to go just like Super Saiyan 10,000 on this thing, okay? So let's go ahead and look at this bro right here. So both markets, both Bitcoin and the S&P 500, which is just an index of stocks, right? They both established their high the same day. Okay, here, boom. So if you're thinking about my previous chart, it was this parabolic curve right here. God damn it. Like that. And they had the parabolic envelope here, boom. And then this is the hypodermic trend line here. Something like that. You can see how hungover I am because I can't even draw a fucking straight line. It's like wiggling around. That's so bad. Okay. Anyway. Fuck. So we see the parabolic curve here, and then once it dinked here, it ran. Okay. So we see pre-hypodermic established here. Right? And then both markets just kind of went ham after they came down, tested this level, and boom. Okay. So the this time window isn't necessarily important. I just labeled it there because I thought it was interesting that there was this delay. But what you see here is that so Bitcoin peaked, right? It hit its all-time high here, and then from the time that Bitcoin peaked to the time that S&P 500 established its all-time high at the time, right? Its previous all-time high. There was a 42-day window. And what's specifically interesting about this is because this level right here, this level was never again tested, has yet to be tested again. Like that, right? So there was a giant bear pennant here. It broke down, it retested, and it never found support there again. And it was just all downhill from there. Okay, but what's interesting about that is it was the same exact day that the S&P 500 established its top, right? And then from there, they were kind of dancing together. And you can see here that they bottomed almost the exact same day. Boom, they both bottomed. Okay, and then they both double topped same day. Boom, double top, right? And then they both established their long-term support the same day. Here, right? And now from here, you can start to see that the S&P and Bitcoin trend seemingly diverged. I say seemingly because, yes, the price action was divergent, but if you know what you're looking at, they're actually not diverging in terms of the intention behind the moves. So this whole move right here, this was all a distribution. It's called a distribution through, it's called a scale-up distribution, which means that the price gets pulled up, and up, and up, and along the way, it's getting sold into as people are getting higher and higher and higher. And you can see here that the S&P 500 didn't hold above this level very long, and it immediately plunged back down into it. So again, what's very interesting about this is there is this 42-day window again. Okay, so now Bitcoin establishes, or I'm sorry, S&P 500 establishes its all-time high, and there's a 42-day window between that and when Bitcoin finally broke its macro support. Okay. And while Bitcoin is doing this and it's marking down, we see this, if you're not familiar with stepping stone redistribution, it's just, it's another way for the composite operator to sell into the market without crashing the market, right? So if you have say you have like a shitload of stock, you don't want to just sell it because then it pushes the price down. So you create these trading ranges so that you can, you're basically controlling the price between two horizontal levels. Sometimes you see this where it's controlled in an ascending channel, but a lot of the times it's in this horizontal channel here, horizontal trading range here, and you see the price getting ping ponged back and forth. And what this is the composite operator, like the people who own the most stock, they're selling every time it comes up here, and eventually when demand weakens, right, it starts getting weaker and weaker. That's when you see this breakthrough. And what's very, very interesting is the same day that that the stock market broke through its stepping stone redistribution, which is this thing, Bitcoin bottomed here. You can't see it because I drew this little like thing, but there's actually a wick down to here, right? And that's the lowest it's been. Was the same day it broke out. And then this is where it gets very interesting, is that now the S&P 11 days later makes a bottom at the same time that Bitcoin makes a top. So you can start to see this divergent price action start to take place. And I'm of the opinion that, we're going to see, I think we'll see some higher highs. I don't think the S&P 500 is done rallying. But what I do think is going to happen is that the S&P 500 is going to come somewhere in here, most likely. Maybe it gets rejected off of here, but most likely it's going to come up into this level right here, this zone right here, and it's going to get rejected. Boom. And when it gets rejected, Bitcoin's going to be somewhere up here, and when it gets rejected, Bitcoin's going to get rejected too. And as the stock market marks down, as the stock market marks down, Bitcoin is going to be establishing its lower boundary of its trading range. So, long story short, it's not immediately obvious, and it's not a one-to-one relationship with the stock market. But if you're looking at what the stock market is doing, and the actual intent behind the movement, and the intent behind these crypto market movements, they make perfect sense, and they're marching hand in hand with one another. Yeah, I don't know. It's very interesting. It's very, very, very interesting because I don't see anyone talking about this. And I'm not really sure why, because it seems just so obvious to me. I mean, I'm sure they're not talking about it because they don't understand. People don't really understand Wyckoff theory very well. Some people understand it a little bit, but it's very nuanced. So people just aren't interested in. It's not like a sexy like analytical methods, So I get it, but the whole purpose of Wyckoff theory is understanding capital flow between indices and the underlying stocks, and also just seeing where money is going between sectors. So yeah, it's very interesting. All right, I got some questions here. Let's see. Seems like Ethereum is leading the run, like the past. Bitcoin breaks Fibonacci. Okay, blah blah blah. I do see a lot of normies talking about it, saying stock money is dumping into crypto. All traders on Wall Street love the huge trading ranges. Yeah. Okay. So I'll continue to update this thing as it progresses. But so far, these movements I've been like calling them pretty well. And I haven't been trading crypto a whole lot because I'm trying to trade it on higher time frames. But its relationship with S&P 500 has been specifically interesting because, the crypto has like been distributing this whole time, and it's already marked down. It's already down 85%. And now the stock market is just now beginning to show signs of weakness. It's just now showing signs that maybe it's about to go through a year-long or maybe multi-year bear market, which would be interesting because, what if crypto bottoms? What if crypto has established its bottom here, or is almost establishing its bottom, So, any questions about any of that stuff? Where did you learn the most substantial information on Wyckoff theories? Everything I learned from, well, like 90% of what I learned, 95% of what I learned through Bruce Fraser. He has a lot of really great articles that he writes, and he does a weekly podcast where he talks about various markets through the lens of Wyckoff theory. But Bruce Fraser is really good. Bruce. Like that. (2009 to 2017) were both bull markets for crypto and stocks, but in 2018 it was a bearish year for both. So you think they'll be diverging from now on? I have no idea. I just think that some capital is flowing from stocks to crypto. Like we're seeing some rotation going on, some capital rotation. If Bitcoin did not bottom, when do you expect it to do so? During January, February? I have no idea. I don't think about the market in terms of like time frames like that. I don't find that to be specifically useful. Are you still bullish on crypto? Well, what do you mean by that? Do you mean like multiple years down the road, or do you mean like immediately bullish? How do you see metals playing into the capital flow? So that's an interesting question, and I'm actually going to talk about that too, because metals are giving both bullish and bearish signs right now. So yeah, we'll have to talk about that too. Do you see any argument for stock market recovery? Not really. I mean, it looks pretty bad right now. Maybe that'll change in the next few days or next few weeks, maybe next few months. But right now, no, I don't. Recovery as in a continuation of the uptrend. No, I don't see that. This looks stocks look very fucking bearish right now. John Bollinger called the stock market top pretty well. You know who else called the stock market top very well? Me. I called that shit. I've been calling this shit every day. So yeah, no, John's a smart guy. I mean, the thing that started me even looking into the stock market top and the whole distribution argument was I'll show you. If I can pull up another goddamn chart. Fuck. Sorry, I'm pulling up something real quick. There we go. Okay, so if we look at the if you look at the was it the monthly? I've already forgotten this. The monthly Bollinger Bands. There was a beautiful M top that played out, and you can see here that it just like played it just perfectly. It was the most perfect monthly top. Will the stock market lead to a recession in 2019 where metal prices will skyrocket? I have no idea, man. There's a lot of bearish arguments for metals right now, so you know, it's hard to say. If we look at some of these metal markets, like here's silver, for example, you know, oh nice, I forgot these markets were open. I opened a short on this a couple of days ago. So if we look at the metal, if we look at silver, we'll talk about silver, gold, and platinum. But if we look at silver, for example, it doesn't look the best right now. So if you're familiar with Bollinger Band setups, this is a perfect. The reason why I shorted silver, well, I bought puts on silver, was because it looks like it's set up for what's called a head fake, where the market comes up. You know, so we see this nice squeeze. I'll go ahead and draw on this thing. So we see a nice squeeze on the Bollinger Bands. Boom, boom. And the breakout of the Bollinger Bands is a strong candle here, but it's like way outside the Bollinger Bands. So I'm playing a head fake short where I think this is going to be a reversal where it continues going down. And if we look at the 2 week, for example, we see we hit the 2 week Bollinger Band. There was a giant BBW here, Bollinger Band W bottom, right here. Boom, boom, and it hit the first target of it perfectly. That combined with the weekly trend doesn't look the best. Also, if we look at gold, gold looks like a giant bear trap. So I see some people calling this a a giant inverted head and shoulders, or head and shoulders bottom, a complex one with two shoulders, something like this. So we see shoulder, shoulder, head, shoulder, shoulder. But in terms of like this parabolic trend, this looks like a fucking bull. I said bear trap earlier. Sorry. This looks like a bull trap. And it hasn't really retraced that far. So like I said earlier, typically parabolic blow off retraces pretty far, and this did not. This only retraced 50% at its maximum. And it's also not making new highs. So it's making lower highs. It's failing to rally. And it's finding this resistance on this 38 here pretty nicely. So it's pretty interesting. So there's a lot of arguments here. I'm kind of looking at this like it's a giant bull trap. And if it pops this low, well, it's got a long way down to go. So, and also if you look at platinum looks like shit right now. Here's platinum. Okay. Let's look at the monthly chart on platinum. Okay. Let's look at 4 week. So we're sitting right on this macro support here for platinum after it just had this like crazy run up, right? And if it pops this support, which is like right above, like, so this thick horizontal here is the daily. It's kind of making like a giant bear pennant after breaking out. Hey. Sorry, my dog might start barking here in a second. If we look at this thing, it just broke out of a gigantic bear flag, and it moved down, and now it's making a bear pennant right above the support. So if this thing pops through that, it's got a long way down to go before it finds support again. So yeah, metals aren't looking too hot, which is interesting because I was thinking they were going to do well, but they're looking really bull trappy right now, which makes me wonder, where's the capital going? So it might just be going to cash. It might be a run for cash, which is an interesting play. But, or, maybe metals find their bottom while the stock market begins its bear market, and then, they rally or something. But in the immediate future, metals do not look very bullish right now. What tool is used for the linear trading ranges? My hands and eyeballs, dog. What do you mean? They're just lines. It's not a tool. But yeah, gold is looking spooky. I might short gold tomorrow on the open, see how it reacts. But yeah, that head fake for silver was just begging to get shorted, and I'm glad I did because it looks like it's getting some pullback on the open here. It's open already. Yeah, I understand it's open already. I'm talking about like I'm trading options on it, so options markets aren't open right now. I'm talking about the New York Open. Have you been trading any forex? I was trading forex on one broker, but ever since that whole thing, I haven't been trading forex now. Where am I trading stocks? I'm just trading stock. I'm trading stock options right now, And I think I'm going to continue doing that because I like it a lot, and I'm doing really, really well, and it fits really well with Wyckoff theory. And everyone in my trading group is, for the most part, I think there are a few people that play like futures and stuff, but everyone's kind of shifted over to options because they play really well with trading ranges, which is, that's my edge. That's what I'm best at. Out of my skill sets, that's my personal best skill set is Wyckoff trading ranges, and options play the best. So um yeah. Also, just like intraday stuff for because I'm currently long. I longed S&P down here because if we're looking at the daily chart, it got way oversold here. We can see it obviously got way oversold. It had a selling climax kind of thing. Uh, and from from like a Wyckoffian view, the supply and demand channel, when it gets violated to the bottom, typically sees a return, like an overshot to the top. So I longed it when it broke it, and I built a pretty substantial long position as it broke through here. And I think it's going to make a last point of supply somewhere up here. Options are damn dangerous. I think options are way safer than playing leverage positions. You can't get liquidated on an options position. I'm not sure why you think they're dangerous. I think they're safer. You know what you're you know what you stand to lose right up front, and you can't lose any more than you buy. So your risk is defined from the get go, and you have a really high profit potential if you know what you're doing. Your option can be expired. So what? I'm not sure what the point you're making is. Is there anything specific that has helped you with finding your position entries? Yeah, I trade it almost exclusively with the Wyckoff theory. So everything I trade is based on trading ranges and market cycles through Wyckoff theory. I do use some tools like Bollinger Bands, and sometimes I'll use this momentum indicator at the bottom to time my entries. But in terms of like trend bias and overall trend modeling, I'm using Wyckoff theory all the way. Yeah, Kenny, I couldn't disagree with you more about options being dangerous. I feel like for my trade style, it offers the best risk to reward that I could find. Because you don't have to time the market. That's the whole point. That's why I like it so much. What's your PS4 ID? I don't have a PS4. So I guess I'll go ahead and wrap all this up and talk about the S&P 500 since I talked about the relationship with Bitcoin. So I think the S&P 500 has I think I mentioned this earlier, but I think it has a little bit more juice left in it for this rally. I'm currently long, and I'm looking to exit right at this PSY level here. You can see this dotted line. I'm looking to close my long here. It coincides with the ICE, if you're familiar with that term. It coincides with ICE, which is this green line here, and also it coincides with like a return to test supply and demand at the top of this supply and demand channel here. And also last points of supplies very commonly go to the PSY high. So, I took a call with the strike price of like 267, I think, and so I'm playing this level right here, and then I'm gonna flip short as fuck and just short the living crap out of the market because this really does look like absolute shit. Especially like I don't see a lot of people doing this either. When you look at large indices like S&P 500, Dow Jones, Nasdaq, blah blah blah, I don't see a lot of people looking at the health of the underlying stocks, which is really important because that's what makes the damn index, right? Is the underlying stocks themselves. And the underlying stocks in these major indices look like absolute shit too. So it really just looks like it's a matter of time before this market just blows a fat one. $267. Which time frame? Expiration date? I'm not gonna say that. But you know where my target is. I've said it on Twitter 1,000 times too. I mean, if you'd like to talk more about it in my trading community, you're more than welcome to join. Go to bitcoinschmitcoin.com, people, if you want to join the trading community and talk about this stuff all day, every day. We can be hung over together and talk about stocks and crypto and stuff. That's where I'm most active. I don't post a whole lot on Twitter, and I don't stream a whole lot anymore, just because I have a pretty low tolerance for shitheads, and there's a lot of shitheads out there. So I prefer to exist in my little safe space that I've created for myself where I can censor. So, yeah, if you'd like to talk more about this stuff, go to bitcoinschmitcoin.com and sign up. But, like I said, I think we really got to watch these levels. I'll just go ahead and wrap this up here. We got to watch these levels on Bitcoin mostly. Looking for a close above 4,300. That would be a nice change of pace. That would be a very bullish sign. But right now, it's having a hard time even chewing through this order block here. So we'll see if it even makes it there. But if it does, if it makes it up to that level, I'm planning to short it. I don't think it has much juice above it, but maybe I'll be proven wrong. And the same goes for like a lot of these alts too. Like looking at Ether here, we see a really nice supply and demand channel here that it's abided by for a while, like really really nicely, and a run to find like a temporary new high for Bitcoin would coincide with a new high with Ether, and a retest of this macro support level here, and also a test of the top of the supply and demand channel. So it's a nice confluence of ideas. So can't complain about that. And yeah. Would you rather short this S&P 500 or various stocks? Trying to hear your opinion. I'm playing both. I'm shorting the S&P, but I'm also I have a lot of things going on. I probably have like 12 open positions right now, 10 of which are stocks in various directions. So, long some stuff, short some stuff on various time frames. So anyway, I'm about to actually go curl up into a ball and die because my hangover is just making me want to slumber for 1,000 years. But yeah, if you guys want to hear these sorts of thoughts, S&P 5 proud racist. Yeah, okay. You can go ahead and get a nice ban. Anyway, the hell was I saying? Oh yeah, yeah. So if you guys want to have these sorts of discussions all the time and hear what I have to say, or hear what other people have to say, a lot of people with a lot of different opinions. But right now we're all crushing the stock market. It's really beautiful. It's a lot like, honestly, it's a lot like it is the equivalent of shorting Bitcoin at the top right now with all these stock market plays. So get in on the action if you feel so inclined. Go to bitcoinschmitcoin.com and maybe I'll try to do a little bit more frequent streaming, but just so busy, We'll see. All right. Thanks for hanging out. Go to bitcoinschmitcoin.com and sign up. But for now, I'm gonna go curl up into a ball and die. So, all right. Have a great night. Hope you guys are as hungover as I am. Bye.